Hello, I'm Sami Zaidan. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, a massive shake-up in the world of business. As the UK votes to exit the EU, the consequences of that decision still being worked out. We'll take a look at what it all means for businesses in the UK, the EU and beyond. They could be facing into months of uncertainty as the UK forges its own path. Around the world, financial markets reacted to the Brexit decision with shock. As the votes were counted, sterling hit a 31-year low versus the dollar. We'll look at what's next for the world's fifth largest economy. Will investors also vote out by pulling their cash out of Britain? And what about London? We'll look at the implications for one of the world's largest financial centres as its future hangs in the balance. Plus, this is a decision that will also impact the global economy. Can central banks around the globe calm nerves and bring stability back? They say they're ready, but global interest rates are already at or below zero. Do they even have the ammunition to keep growth on track? We'll take a look at what challenges now lie ahead. Well, for the past few weeks, global financial markets have been dominated by fear of a Brexit. Now it's a reality. Britain's voted on Thursday to quit the 28-nation European Union. 48.1% voted remain, but 51.9% voted leave. The Brexit campaign prevailed, and it could prove the biggest shock to the financial system since the 2008 economic crisis. The UK's EU referendum has demanded the attention of the world because no country has ever left the trading bloc. What is certain is that the decision will initiate at least 2 years of messy divorce proceedings with Brussels. But there's massive uncertainty about what Europe, without its second biggest economy, will look like. And all this uncertainty being felt in financial markets. Phil Lavelle has more from London.
He has spent months trying to convince Britain to stay, but the look on David Cameron's face says it all. He has lost the biggest fight of his career.
The British people have voted to leave the European Union, and their will must be respected.
Who will replace him? Well, how about Boris Johnson? The loud boos from protesters might not sound like a willing endorsement, but the former mayor of London, long suspected to harbour PM ambitions, led this Leave campaign, and he is almost certain to put his name forward. This is, some would say, his moment. And it is a moment that came as a huge shock to some as the UK woke up. That is, for those who had managed to get sleep. Not because the Leave campaign was expected to lose, but because just a few hours earlier, it looked like the Remain campaign had won. Prominent Leave campaigner and UKIP party leader Nigel Farage had even started to believe it at one point. He had to make a complete U-turn, not unhappily, as he declared Independence Day.
Let June the 23rd go down in our history as our Independence Day!
Repercussions were felt first in Asia. The markets in the Far East reflected that huge anxiety. The value of the pound fell to its lowest level since the mid-80s. And as the markets opened in London and on the continent, that pain was clear. The FTSE index down 8% as the trading day began. Overseas, British territory Gibraltar had been the first poll to open, but voter turnout had been lower than expected in other parts of the UK. The nation hit by massive floods, what felt like biblical rains. Question is, did they have a seismic effect at polling stations? And so, as the people here begin a new day, not just literally, but also metaphorically, the only real certainty now is how uncertain everything is. In the short term, it's about allaying fears, keeping the markets happy. Remember, the financial world hates uncertainty. Just look at how the pound plummeted to that 31-year low. And then in the longer term, it's about looking at how the UK ends up forming itself in the future. Remember, Scotland could very well declare independence at some point. Could Northern Ireland follow? Could the UK end up being England and Wales, or maybe even just England? Nobody knows. You know, this has been a bitterly divided campaign all along. It has split friends, it has split families, and yet the one thing every side can agree on, regardless of what they think of the result, is this is democracy in its rawest form. Everybody here had a voice, and ultimately, the people have spoken.
Joining us now from London is UK-based author and economist Anne Pettifer. She's Director of Policy Research in Macroeconomics, or Prime. Good to have you with us, Anne. The UK has just voted itself out of the European Union single market, out of the free trade agreements the EU has with 53 countries. I mean, if you're a business in the UK which relies on exports, this is not good news, is it?
It's very destabilising, and I really wish that the Prime Minister had never called this referendum. And I also wish that economists had behaved a little more sensibly. What this has done more than anything else is to discredit economics. Nobody takes all the threats and the project fear of the economists seriously. Neither the IMF, the OECD, the National Institute of Economic Social Research, the Treasury, the Bank of England, the Federal Reserve, none of these have really had an impact on the British public, not sufficient to persuade the British public not to vote by majority to leave. Now, I think what that reflects is the flaws in the economic models that these organisations promote. And I think what the vote reflects is a rejection of those economic models, and in particular of austerity, of requiring the innocent people, if you like, within the economy to pay the price of a financial crisis of which they were not guilty,
right,
while the City of London continues to thrive. And that tension is very deep inside Britain, and it is, of course, very deep in the United States as well, and also across Europe. And until economists and politicians resolve the tensions between a dominant finance sector and the rest of the economy, I'm afraid there will be instability.
We're talking about London as a global finance centre, as one of Europe's leading finance centres. Where does London stand as a result of this Brexit vote?
Well, there's no doubt London will carry on being powerful in the global economy. It's a great city. There's enormous talent here and enormous abilities, and it's also very well positioned globally for connecting markets across the world. So I don't believe that London will lose its place in the global economy very quickly. There are real questions over what will happen to the City of London and to those companies that come here in order to be able to work in Europe. And they will be considering their futures, and then the question is what impact that has on jobs and opportunities in Britain. And then the question is, what will the government do? Will the government enact policy to counter such negative trends, or will the government reinforce those negative trends by pressing on, as the OECD once urged them to do, with austerity? I think the latter would be crazy. I think the government has to pull back from its contractionary economic policies and has to step in at this moment of private sector weakness.
All right, Anne Pettifer, thanks so much.
Thank you.
So what's next now that Britain has decided to leave the European Union? Well, the Bank of England and the European Central Bank shore up financial markets to prevent recession. European leaders will have a lot more meetings ahead of them in the coming weeks to deter a further breakup of the bloc. Remember, the UK has just 2 years to renegotiate those laws and trade deals with more than 50 countries. Well, the future political leadership of the UK itself is cloudy. Leaders of major parties campaigned for the Remain camp, which lost. What isn't clear is what nature a Brexit would take. The UK may negotiate a deal like Norway, which is a member of the single market but not part of the Union, or it may follow Switzerland and sign a series of bilateral treaties. Well, there's been plenty more reaction in Brussels. Nadine Barber has been watching that.
The leaders and the institutions here in Brussels have all been preaching unity and stability on Friday. But what really will count, I think, is A, whether they can get some kind of deal on the table for them to say this is what we'll be offering Britain, and B, whether they can offer their own electorate some sort of reform. Some of those electorates have been crying out for a more flexible European Union, a growing Euroscepticism within many publics around the continent, and of course what's going to count is how quickly that can be delivered.
Joining me from Brussels now is Guntram Wolff. He's the director of Bruegel, the Brussels-based European economic think tank. Good to have you with us. First of all, if you're a business right now in the EU, how cloudy is your future looking?
Well, I think it's actually quite cloudy in the sense that there's a lot of uncertainty out there in the market. Nobody really knows what the exit of the United Kingdom means, what kind of trade relation will there be, what does it mean for me as a producer that has part of the factories in the UK and part of the factories on the continent. How much tariffs will I have to pay in several years down the road? So there's a lot of uncertainty, especially in the industrial sector at this stage.
Do you think this could be the beginning of that doomsday scenario, the unraveling of the single market of the EU?
I think the real issue is that this referendum has shown us that a divisive campaign that is really anti-globalization, anti-foreigners, anti-open society can actually gain an election. And that raises lots of worries because, of course, also on the continent, there are these kind of movements. And the more they gain strength, the more that can be damaging for our economies.
Well, how damaging will that be to EU economies, given that we're already hearing some of the voices you were referring to from France, from Netherlands and elsewhere saying, hey, let's have our own referendum?
Well, at this stage, these are the voices of still minority parties. And as long as these are just the voices of minority parties, things are sort of contained. But of course, it spills over even to the government parties. And I think the protectionist reflex in a number of the big countries will rather increase than decrease. And so I think overall it means that business, but also society will be much less open now than we predicted earlier and were foreseeing earlier. And that includes, by the way, also the United States, where we see a presidential campaign where one side is really running a very anti-globalization ticket.
What about some of the measures that some European Union leaders say, you know, we're going to push ahead with further, quicker, deeper integration? Can any of that really alleviate the uncertainty that businessmen are feeling that you've talked about?
Well, I would say yes. I mean, a lot of the uncertainty that we are seeing is really uncertainty about the determinedness, how determined European leaders are in pushing ahead with European integration and forming a stable European Union. And frankly, it will be quite important to see how strong the messages are that come out of Brussels.
If we put the short term aside, because the short term is very volatile, isn't it? How much of a blow do you think the euro is going to take over the medium and long term? And what will that mean for EU citizens and their businesses?
Well, I think the euro as an exchange, as a currency, is a stable currency. The eurozone is a surplus area, so I would rather expect that the euro appreciates at least a little bit at the beginning. But I think what we are seeing, of course, pressure, and we could see even more pressure on some of the eurozone periphery, precisely because of these political doubts. And I think the eurozone periphery at this stage looks much better than it looked several years ago. And my baseline expectation is therefore that the ECB and governments will stand ready to prevent sort of bad market behavior on the eurozone periphery. But clearly, the risks have increased compared to before the referendum.
A lot of analysts would say the European Central Bank already low on ammunition, on ammo. Is there a lot that they can really do to try and stabilize markets and calm fears?
Well, I think the kind of fears that could emerge, they can be stabilized by central bank action. So the ECB can increase its quantitative easing program without major political struggle, and that would be hugely stabilizing in the sovereign bond markets. It can also provide much more liquidity than it does currently to the banks without really any problems. What is true, though, is the ECB cannot lower its interest anymore. So the sort of the recessionary impact of all of this and the inflationary impact on all of this, so disinflationary impact, that can be only addressed in a very difficult way. So ECB can address financial stability issues quite well, but it cannot address the recessionary impact really well.
All right, Guntram Wolf, good to get your thoughts. Thanks so much.
Thank you.
Well, the ripples of the Brexit shockwave are being felt globally. Joining us from Dublin in the Republic of Ireland to talk more about this is Alan Barrett, Professor and Director at the Economic Research Institute. Thanks for being with us today, Alan. This has been a very divisive vote, hasn't it? I mean, Scotland's gone a different direction from England for the most part. There have been calls in Northern Ireland for a referendum on their future. I guess, how worried should businesses in the UK be right now about the possibility of a breakup of the UK itself?
Well, it's yet another important dimension to this entire Brexit event. For quite a long time, actually, in the Republic of Ireland, we had been worrying about the possibility of a Brexit and the full set of implications. So we had been wondering, and again had sort of thought about this possibility, that if Scotland was to vote in one direction and England was to vote another, that it could indeed lead to a second referendum in Scotland on independence. To be honest, we always felt in Ireland we were thinking a little bit more about some of these issues than may be in the case even in the UK. So as you say, there is the possibility of a Scottish referendum. In Northern Ireland, the implications are actually quite huge. Northern Ireland could find itself in a situation of really being sort of cut off from the European Union, which has been very, very important to it. So I think the sort of political, constitutional instability is just yet another element of the uncertainty that this is all unleashed.
And how, to what extent or how disruptive will that uncertainty be for businesses in countries like Ireland, which have very close trade ties to the UK?
But on this occasion, we genuinely are in uncharted waters. Remember, no country has ever tried to leave the European Union before. And quite the contrary, I mean, most countries and companies have existed in a world for the last 40 years where there was sort of greater integration, more and more countries were joining the European Union. So we were on a particular trajectory, and now we've been moved on to a very, very different one. And in truth, when you look across the world and you look across historical spans, it is very, very unusual to see these sort of trade blocs breaking up in this way. So there's very, very little historical precedent. So in truth, it is just very, very hard to know how this is all going to unfold. So one of the scenarios that we have been predicting for quite a while is that a lot of companies are simply going to sort of stall on investment plans, stall on expansion plans, wait to see how the whole situation unfolds. But of course, by holding back on those sort of investments, there's a sort of a self-fulfilling prophecy that will put a drag on economic growth. And so, I think in the immediate term, we're going to see the implications of Brexit very, very quickly.
Hang on, Alan, when you say stall on investment plans, are we talking about Irish companies or companies, international companies in Ireland, stalling on putting money into the UK?
I think it's the stalling on putting money into the UK. I mean, again, in Ireland, we've been looking at this for quite a while. And one of the issues that did come up was the possibility that some foreign direct investment might be diverted from the UK into Ireland. Now, I think that might be a small effect. But nevertheless, in sort of interrogating companies and looking at their behaviour, one of the issues that has come up constantly is that, companies do not like investing into uncertain circumstances. We're now in a situation where in the next 2 years, the United Kingdom are going to be negotiating the terms of their withdrawal. In that period, we don't really have a clear sense as to what the post-Brexit arrangements are going to be in relation to trade, the movement of people, a whole range of issues. So I think it's a pretty sort of standard analysis to say that when companies see that level of uncertainty, I think it makes it less likely that they'll invest in the United Kingdom, and it could be the case that that money will be diverted elsewhere. But I think because of the level of uncertainty generally, I think most economists would agree that the level of investment is going to be lower into the UK, but possibly beyond that.
Well, what about the impact on other global economies, the United States trade relations with the UK, China, India, and so on and so forth?
Well, again, there's a real uncertainty here because the trading relationship between the United Kingdom and all the countries that you mentioned is currently essentially governed via the European Union. So the United Kingdom has a whole host of trade relationships and sort of, let's say, the rules of the game, but they're governed by the European Union. Now, if the United Kingdom puts itself outside the European Union, it's going to have to engage in a process of bilateral trade agreements with literally tens of countries. So again, it's not entirely clear how those sort of trade negotiations are going to go, what sort of terms and conditions the British will manage to achieve. And questions have even been raised about the sort of the human capacity of the United Kingdom to negotiate all these deals. There's a simple reality here that for 40 years now, the European Union has been doing trade deals on behalf of the United Kingdom because it was a devolved power. All those sort of powers are going to have to come back to the United Kingdom now. They're going to have to sort of try and ramp up their expertise as quickly as possible. But as you know, things such as trade deals are phenomenally complicated areas. So on the one hand, the UK is going to be negotiating with its exit from the EU, while at the same time having to try and put in place new trade deals with tens of countries.
What is it that realistically central banks can do? Can they really single-handedly bring some calm and stability to global economies and markets?
Well, I think there are fears around liquidity issues, and I think the central banks can certainly do a good job at alleviating those. But I mean, apart from that, this is the sort of issues that is really going to hit real economy matters, such as levels of investment, as I was describing before, and knock-ons on things like employment and trade. So I think the power of the central bank in those sort of areas is probably quite limited.
All right, and final one. What's the bottom line here, Alan? Is this going to be a drag on global growth?
Oh, I think unquestionably. I think the only question is the extent. A lot of analysis in advance of this sort of saying how bad this was going to be. I think we're all possibly in a state of shock at the moment, so maybe it's not a good time to make very, very firm predictions. So I certainly think a drag on global growth, the extent to which we'll just have to wait and see.
All right, thanks so much.
Thank you.
Well, many point to countries like Norway and Iceland as models of what the UK could become, freed from the bureaucracy of Brussels. But opinion in Iceland, which is not in the EU, is split on what life outside the bloc is really like. Lawrence Lee reports from Reykjavik.
For the Brexit campaigners, Iceland is a vision of what the UK could be. Like Britain, a proud island tradition with economic ties to Europe, but free from the Stalinist constraints imposed by Brussels. They have a friend in Christian Loftsson. He's Iceland's Mr. Fish, free to export whale to Japan and mackerel to China, to buy his fishing boats from Turkey, all under deals his country has been free to reach without EU interference. For him, Britain has nothing to fear and everything to gain outside the EU.
I'm all for a common market. We are a member of the European Economic Union and have a lot of dealings with the European Union and the European countries. So something that is done in the beginning, like the common market, and this has been expanded into a monster. And in my opinion, Britain should just say farewell.
Unemployment here is 2%. 1 million tourists come every year. That's 3 times the entire population. Iceland is a sort of frozen land of milk and honey for the anti-EU campaign. Iceland had been trying to join the European Union, but it stopped after the financial crisis and the bank collapse when the creditors were trying to get their money back. Its independence meant that it was able to default on its debts, and economic recovery followed. Had Iceland been in the European Union then, it probably would be where Greece is now. But this independent Iceland is also part of the Schengen free travel zone. That is absolutely crucial for the huge tourism industry. It's also a part of the Iceland story, ignored by the anti-immigration Brexit campaign.
If you claim on the one hand that the problem is that you have unlimited immigration and not enough influence on the EU, how can the answer be, taking away all the influence and opening up all the borders?
It isn't easy to see a comparison between a country of 300,000, whose economy is based on fishing and tourism, and a UK with a leading role in Europe and a seat at the UN Security Council. But for the Brexit campaign, that doesn't matter. For them, Iceland represents independence.
And that's our show for this week. Well, there's plenty more for you online at aljazeera.com/CTC. As you can see, it'll take you straight to our page, which has individual reports, links and entire episodes for you to catch up on. You can also get in touch with us by tweeting me at Sammy_Zaidan, and do use the hashtag AJCTC when you do. Or you can drop us an email. countingthecost@aljazeera.net is our address. That's it for this edition of Counting the Cost. I'm Sammy Zaidan from the whole team here for now. Thanks for joining us. The news on Al Jazeera is next.